Hey everyone, artificial intelligence is taking the investing world by storm. In this video, I'm going to compare two extremely hot, innovative AI stocks and compare them and answer which one I think is the better AI stock to buy. SoundHound AI versus Nvidia. So without further ado, let's jump in. Let's take a look at these two.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
SoundHound AI was growing revenue at nearly 200% for a quarter, and then Nvidia surged and reclaimed the lead in favor of SoundHound AI. 265% revenue growth for Nvidia in its latest quarter. The quarter before that, it grew over 200% as well. Nvidia's demand for its products are absolutely exploding. Management even said in its latest quarter, you won't believe what management said. Said that demand far exceeds supply. Far exceeds supply, even though their revenue increased by 265%. If they had more supply, they would have been able to grow even more. Phenomenal, the surge that Nvidia is experiencing. And that's what's driving, I think, all of these other AI stocks is the results that Nvidia is delivering. And some other AI stocks as well are delivering phenomenal results, but nothing in the magnitude of what Nvidia is delivering. SoundHound AI, meanwhile, 18.61% revenue growth in its latest quarter. However, from the previous quarter, meaning quarter over quarter instead of year over year, SoundHound grew by 52%, so much better revenue growth looks to be on the horizon for SoundHound AI. The next thing I wanted to compare these two on is operating profitability. And you could see Nvidia demonstrating excellent growth in profits, 54.12% in operating profit margin. These are excellent. This is among the highest of the high profit margins you'll see. The highest profit margin, if you've been following my channel, you'll know it's Visa. That's right, at over 65%. But Nvidia is approaching that in its latest trailing 12-month period. If its demand continues to soar as it is, I wouldn't be surprised if Nvidia eclipses that 60% operating profit margin, but only temporarily. I don't think Nvidia can sustain operating profit margins above 60% in the way that Visa can because of the differences in the industry dynamics. Meanwhile, SoundHound AI is negative 211% in operating profit. Although it is making great progress, it's still got a long way to go before it can deliver profits on the bottom line. So for the next couple of years, Nvidia is expected to grow revenue by 60% in 2024 and 21% in 2025, with earnings per share growth of 70% and 22% in those years. Meanwhile, for SoundHound AI, they're expected to grow 49% in 2023 when it's all said and done, 50% in 2024, and 43% in 2025. So better revenue growth is expected from SoundHound AI in 2025, but for 2024, Nvidia is expected to outperform SoundHound AI in terms of revenue and profitability. So before I share with you this next metric, I want you to better understand the cash flow from operations. Cash flow from operations is one of the most vital metrics I consider when making an investment decision. If any financial shenanigans are happening, looking at this metric can help uncover the fraud. Moreover, looking at profitability without considering cash flow from operations can lead to a misleading picture of a company's performance. For instance, look at the example I have created here. The company reported a net loss of $250. However, when you look at the cash flow from operations, it was a gain of $35. How can that be? Well, two expenses a company must report on the income statement are depreciation and stock-based compensation. Importantly, these are non-cash expenses. Money is not leaving the company for these expenses. In the case of depreciation, when a company buys a machine for $750, it pays all of that price up front. However, generally accepted accounting principles require that the company take the expense over a period the machine is expected to operate. So if the machine is expected to last for 10 years, the annual expense will be $75 per year for 10 years, even though the company paid the $750 cash at the time of the purchase. Also, when a company offers its employees a stock option, it's not parting with cash. However, it must record the cash value of the option as an expense on the income statement. So moving on to the working capital items, inventory management is the easiest way a company can increase cash flow. The simplest case is when a business has 100 inventory units, sells 30 units, and doesn't replace those units. The decision would reduce total inventory and increase cash flow. As you might already be thinking, this isn't sustainable. Eventually, the company will deplete all its inventory and go out of business. Accounts payable is the money that a company owes another company and has not paid yet. And accounts receivable is the opposite. A company can increase its cash flow by collecting payments faster and paying suppliers slower. If done with skill, companies at scale can take advantage of these timing differences to boost cash flow by a couple of percent annually. Costco is one example that employs this strategy masterfully. Overall, if you observe cash flow increasing unsustainably, you should expect a reversal of that trend. The other big risk to consider is if you see a company reporting substantial profits but negative or weak cash flow due to rising accounts receivable. All right, so now that you understand the importance of this metric, you can see Nvidia here at 46.11%, well ahead of SoundHound at negative 195%. But again, SoundHound AI making phenomenal progress in improving this metric. If you remember, early in 2023, SoundHound AI implemented a restructuring program to cut costs, and that's already starting to bear fruit. In its latest quarter, while revenue increased nicely, the company's costs decreased year over year. So it generated more revenue. At the same time, it decreased spending on sales and marketing. I always find that to be impressive because it's easier to grow sales if you're willing to increase marketing, advertising, promotion, incentives, etc., right? But SoundHound AI increased its revenue while at the same time decreasing advertising, marketing, incentives, and promotion. So it's demonstrating that there's strong organic demand for its products and services. And you could see that for the next 2 years, prospects look really strong for SoundHound AI. And finally, I wanted to compare these two on a valuation. And the metric I chose to use is the forward price to sales ratio. And they're selling at very similar valuation, especially today. SoundHound AI stock is up 20, 30, 40%. It keeps going higher and higher every hour that I check the stock price. And you could see here, look at this surge higher in valuation for SoundHound AI. It's now trading nearly at the same price as Nvidia. And I don't think it should be. I think Nvidia, as we saw, is a much better company. Revenue is growing faster. Profitability is much stronger. And its prospects are better for 2024 at least, even though 2025 will likely be better for SoundHound AI. Still, I like the mature business Nvidia, already profitable, already strong, generating cash flow from operations. So if I'm going to pay the same price, I'd rather go with Nvidia. So if I was to choose one of these two excellent AI stocks to buy today, I would choose Nvidia. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.